This is Eat, Sleep, Invest, the marketing podcast for real estate investors to get more deals.
Hey, welcome back, everyone, to another episode of Eat, Sleep, and Invest. I'm your host, Brian Driscoll, and I'm here with Dr. David Phelps. What's going on, David?
Hey, Brian, great to be here. I didn't bring anything to eat, so I guess we'll do that whenever we do that. But I did sleep last night. I will eat sometime today, and then, let's talk about investing because that's what this is all about.
Nice. Yeah, so David, you have vast and broad experience. Like, tell everybody where you came from, like what all you do, all that good stuff.
Well, I came from, I think, really being, like a lot of us, very entrepreneurial in my early years. I'm talking about when I still lived at home and I was a kid, right? I wanted a better bicycle. I wanted a better tennis racket, tennis shoes, because those are the kind of things I was into as a kid. And my parents, good parents, they didn't just buy me what I wanted, right? I had to earn, and I had to actually go out and work and earn it. And so I learned how to sell greeting cards and lawn jobs and the typical stuff that a kid could do to make the money to buy the stuff I wanted. And that was a good training. But I took that entrepreneurial spirit and actually deviated and went to what I thought was the path of safety and security in life. And that's higher education, which I'm not against education. So don't get me wrong when I say that. But I went, to college, and I went on to dental school because being a professional, came with respect and a probability that you could earn a relatively above average income, and that's security, that's freedom, right? And I'm not saying that's a bad thing. We need doctors and engineers and lawyers and all those people. They're important. But I realized that wasn't really my heart. And so before I actually got out of dental school, I was buying real estate. So you can kind of see here's this guy that was kind of contorted between doing all this academic stuff. And then it's like, I want to get out and make money again because I learned how to make money as a kid. It's like, I want to make money. So I kind of did both at the same time. Eventually, real estate won back out again. Now, I did go on to become a dentist, and I did that. I worked really hard to be a good dentist. So don't get me wrong. I when I focus on something, I take it all the way. So I took it all the way, but I left it after I did it for 20 years. But I was also doing real estate on the side the whole time. And today I can be very, very honest about it, Brian, and tell you and the listeners that I went to two kinds of meetings back then, right? I had to go to continuing education for dentistry. You have to do that. And I wanted to. I wanted to learn and become better. But I also went to real estate meetings. And I just always was more energized going to real estate meetings. That should have been a clue. But there's this thing called sunk cost fallacy. And when you go so far down the road in something, some project, some education or something like that, it's not easy just to turn off and go, well, I think I'll just toss that away. So I stuck with it, the dentistry, for 20 years, still doing real estate on the side. Eventually, there's some things that happened in my life, my daughter's life, health issues that kind of gave me the permission to let go of the dentistry. And today, I'm perfectly fine with having done that and doing what I do today. So today I have a group called Freedom Founders. I think you know about it. It's a community like other masterminds that you and I are part of. This one focuses on people that I have affinity towards, which would be my colleagues in dentistry and medicine who long to have a better opportunity to facilitate their financial freedom, their investing in alternatives outside the stock market. And so with my connections to people like you and people in the other masterminds, I facilitate the education, the framework, the connection, so they can do that. And that's where I have my fun today.
That's cool. And it's interesting too, because especially like I think a lot of people deal with this. You go so far down one road, it's hard to pivot and come backwards. It's like, oh, I'm already committed.
Yeah.
Am I just wasted? Is that all wasted or whatever? And it's in your head, but it's a really tough decision.
It's tough. I tell people it's never wasted. And I think that, again, it's hard because I think we're people that want to be responsible and be good stewards of, anything that we have been given an opportunity in, or whether we pay our way or go into debt to do something. We've been taught through life, through parents and mentors and teachers, to be good stewards, and I think we want to do that. But there's also reality, Brian, and I think that's where you have to kind of check and say, if I'm going to live my life and be true to myself and true to what's inside me and how I want to serve, then I think people should at least explore potential pivots in life. You don't just toss it all away. You have to have kind of a plan B, and you can't just run from one thing to the next, of course. That's kind of crazy. But I think having the permission to look for opportunities to evolve in life and not be static in one business career type model And your story is similar. I mean, you have a propensity for what you do in SEO and tech world, and then you kind of found real estate and said, I could kind of put those together. And so, you've done the same thing. You've merged interests in separate things and saw how you could bring them together with a synergy. Sometimes this is much more powerful than the kind of singular lane that we started down. It all starts somewhere. But I think you've got to be willing to have open eyes and, kind of test different ideas as you go along. And that's where I think being a part of strong groups of people that have your back, don't have an agenda or a bias, but just, have different experiences. I couldn't do my life today or live in the world today without having like inner circles of people that I trust to give me perspective, right? I don't want to do it all solo.
Yeah, and you're right too, because who you surround yourself, that's so important. Because especially for people starting out too, who they surround themselves with, people that have made it and are successful generally want to help.
Yes.
So, and I always look at it, it's like what they say, you always want to be the stupidest guy in the room.
Yeah,
it's true. Because you're always going to elevate yourself, but the people that have made it want to help other people too. So surround yourself with those people, and that's 100% awesome there.
Yeah, it's so true, Brian. And I think that we all have some measurable sense of pride and ego, because we want to feel like to the people that matter to us, our family, right, our spouse, we want to be strong and show that we've got this. But there's the other side that says if we're not willing at some point to be vulnerable, and I'm not saying that's easy, that is hard. But if you're with the right people that aren't going to judge, because truth be told, and you and I both know this, that behind the scene, behind the curtains of every, quote, successful person who at least today would show themselves as successful, or by society standards show to be measured as successful, if they're willing to open up the kimono, so to speak, and show behind the scenes and show what it took to get to wherever they are today, if you want to define that as successful, there's a lot of skeletons and a lot of broken bones and stuff behind that pathway. And I think that's what we're too afraid to show. Well, I don't have it all figured out. I certainly, but I have to show up and look like I've got it all together. No, don't do that. Find the right places where people are actually, as you said, there to share and give back. And the more willing you are to be vulnerable about what you don't know, the mistakes you have made, the questions or challenges that you're facing right now, whatever those might be, that you're not totally sure of, be that way. And that's going to be your fastest track to move from point A, where you are today, to point B, whatever that destination or next step in your life wants to be, whether it's higher ground or better relationships or better business or stress testing, the model for the market conditions today. But there's always provocations that we have to deal with. And I just say, smart as you might be, as willing to work as hard as I know everybody that's listening to this today have proven to be that person to work hard. Just don't do it by yourself. Find the right people.
You know what? That makes me think. I don't remember where I heard it, but being successful, they said there's two different ways to look at it. It's like, picture yourself, say you're crushing it and you're riding a lion. People are looking at you and they're like, geez, oh man, that guy's riding a lion. He's a beast, right? And then you're on the back of the lion, be like, I don't know how to get off of this thing. I don't even know what's going to happen.
That's right.
And it's like all perspective too. I'm like, some people that are crushing it, everyone's dealing with the same stuff. Some people just are a little bit ahead.
That's it. Just a little bit ahead. And sometimes those are the people on the frontier. And at some point, they may have to make some hard pivots. And then it's like, is that bad? Nope. It's just part of life and part of the journey. And again, if you're courageous enough to say, I will take that chance, mitigate the risk, but take the chance to try something different, I think that's a good thing. And again, you can mitigate the risk by being around other people who maybe have done some iteration of what you're thinking about doing and can kind of, test it a little bit. Don't do that. Oh, perfect. Thank you. Explain why. Now I get it. Now I can, course correct a little bit sooner than if I just tried it on by myself on my own.
Right. Now, so in the education space, in your mastermind, what exactly are you guys doing?
So really it's changing the paradigm of, a lot of business owners, high income, maybe relatively high net worth people who learn to trade time for dollars at a high level because you got the specialized education. And that can be a good thing, but it can also be a curse, because if you're so tied to being on that turnstile where, yeah, when you show up, you have high billable hours, but it's all dependent upon you. There is no true freedom to that. And of course, you're so busy and so specialized in a certain area of knowledge that you really don't have time to ever explore outside and really develop any base financial acumen. I mean, even in the schools today, Brian, the public schools, they don't teach anything that's relevant, to life skills and finances. That's what the big piece is missing. Well, it's missing in all levels, right? You could be the smartest brain surgeon and you may not have a clue when it comes to like investing money. And that's not that's not a fault of the person. It's just a fault of we get so specialized. So in our community, we really start with financial acumen. And because I'm a pretty contrarian guy, I throw a lot of darts at the traditional financial models. I'm not picking on financial advisors per se. I think there's a lot of smart people and they certainly have a place. But I tell our folks come to us because they're tired of abdicating their financial future to the market or a financial advisor or a CPA or a money manager, whatever it might be, or 401k manager. They're tired of doing that because they see that they really have no control. And in the end, it's all about income. It's all about income. We talk about, building net worth. Well, look at your balance sheet. What's your net worth? My net worth is, X 7 figures, right? Well, that's meaningless unless that net worth actually can produce income when you need the income. So you can go into growth modes and growing an estate, growing a net worth. That's a good goal to have, but at some point, you better know how to turn that equity, that net worth into income, particularly if you want to start backing off of trading time for dollars, backing off a little bit and actually owning a real business or owning assets that whether you manage them or somebody else manages them, you're not there having to do it 24/7 like you have to do when you have a job, a career, a business that's dependent upon you. So that's the first thing we change their mindset so they can actually see that their work can move into something with the assets. Could be running or operating their business at a higher level where there's more people providing the service and they become more the CEO. That could be one iteration. Investing in the alternative space, the real estate space that we know so well is another piece of that, or it could be a combination thereof. That's the mindset shift, and that's just not taught in schools today. In schools today, kids are being taught how to be good workers. Oh, do we need good workers? Yeah, we do, but I'd rather teach my kids how to be the orchestrator of the good workers and build something that they could pivot with the economy and not be run over when we go into like a recession and there's going to be layoffs and it's going to be hard times for a lot of people. And I don't like that. But it is what it is. So how can we help people that we want to help to be able to rise above that and not be, hit by the tsunami wave when it hits and causes a lot of, destruction of wealth and people's jobs and people's livelihood.
Yeah. And it will hit too at some point. Like they always go up and always
down. Yeah.
And you're right with the schools too. I was even just talking with somebody else about this too. Like schools teach you the basics and how to be a worker. And then they don't teach you anything on finance the whole way through. Like 18-year-old kids right out of school getting pounded with credit cards. They don't understand how to control money, how to keep money, things like that. They rack up a bill and now you're trapped. You have to work for whatever it is, and you don't even get to keep the money. And it's interesting that what you do, because you're right, a lot of even high earners, they're making a lot of money, but if you don't go to work, you don't get paid.
That's right.
So now what are you doing with the real estate? Like what specifics? Are you getting them involved with like turnkey stuff, or what are you guys doing?
Well, we'll look at anything that makes sense in a current market environment. So turnkeys, not so much right now, because typically people that want to buy turnkeys, they have good credit and they want to use the leverage of other people's money, banks, right? And up until the last 6 months, that was a good thing because money's been so cheap for so long. So you could finance, anything if you have decent credit and use that leverage. We know how, that leverage can be a positive thing if you buy the right asset and you manage it correctly. Well, we've had the tables turned in the last 6 months because of the fight against inflation and the Fed's fund rate going up, which triggers mortgage interest rates to go up. And until values come down enough to match up with the rise in interest rates, then there's an offset there where certain assets that made sense a year ago or 2 years ago or 3 years ago or 4 years ago, going all the way back, made sense. Right now today, there's this dichotomy where we're going through that correction period where a lot of deals that were being done or penciled out in the last 6 months have been like just tossed. Unless you could get the seller who was motivated enough to give in to make sense from the buyer standpoint, then those deals just they don't go anywhere. So that's changing. That's the market changing. So turnkeys leveraged probably don't make as much sense for sure. But equities in general, I think right now, whether it's syndications and multifamily, self-storage, mobile home parks, communities, again, you have to look at those one by one and realize if, again, typically using underlying institutional financing is what juices those deals, right? Then the equity investors, passive investors like me, come on top of the debt financing. And that's where we've been riding. Well, now we've got to be a little more careful and look harder at those deals and say, well, do they make financial sense at whatever the underlying debt structure is? What's that debt structure look like today? Is it floating rate? Are we just banking on refinancing in 2 or 3 years at lower rates? I don't know if I want to play that game, right? I've got to look at a lot of different variables there. So again, I'm not saying don't. I'm not saying there's nothing good out there. You just have to look at them a lot differently than we looked at, even 9 months ago. The debt side, owning debt as an asset, not a liability, that is be on the lending side, like being a bank, lending money to operators who are good, sound operators. And again, you still have to look at their model and say, well, what's the exit, right? Because the exits have all changed. The quick, easy refinance at the low interest rates, well, that's not there right now. So if I'm going to loan money to you, Brian, just go on a particular deal, and I like you and you've been a good operator, but still I got to say, well, Brian, show me the numbers, right? Show me how you're buying it today at this and how you're going to exit. And what if rates, stay high, go higher, or maybe there's even a pause in the credit markets and the banks just like kind of shut down, kind of like they did back in the few months during the spring of 2020 when we had COVID, and there was actually a pause in the credit markets for 4, 5, 6 weeks, as I recall, and then the Fed came to the rescue and they opened back up again. But it's kind of showed people again, the markets are not always liquid, right? So you have to look at all these things with that lens of if you've been there and seen it before, well, what is it that we don't know? What is it we have to plan for and be prepared to pivot? What is the pivot? What's the pivot? Am I willing to stay in this investment longer than I thought? Am I willing to do that? If not, maybe don't get in it, right? Know who your operator is. What's their experience? Can they manage through a gap period where we can't sell it, they can't refi, they can't exit? So lots of things to look at there. But that's a lot. That's what's fun about the changing markets is you get to look at that, and with the inefficiencies of real estate, the inefficiencies opposed to Wall Street, which is very efficient. I'd rather be in an inefficient marketplace because that's where we can go through the nooks and crannies and the voids that the retail space can't handle, right? The Blackstones, the BlackRocks, they can only play ball at a big level. I don't have to play ball with them. We could be down here, take a different level of a tranche down lower and pick where we want to play ball. There's plenty of places to play, right? There's plenty of places to play, Brian, and you don't have to just look at what the big players are doing. I don't even want to try to be there and compete with them. That'd be ridiculous, right? We don't have to.
Yeah, and you're right, too. There's so many different ways. That's what I like about real estate, too. There's so many different ways to do real estate. Like you can lend, you can buy, you can do rentals, you can flip, you can wholesale, you can be creative. Like there's so many different things. And when the market's shifting, you can pivot and still stay in the space. It's just you have to adapt or you have to buy.
That's right.
Deep things like that. What are some things that you are changing to adapt with the economy right now?
Well, as far as our business overall, fortunately, we're pretty strong in our messaging and I think our reputation and what we stand for. So I think in any business, when you're going through a changing marketplace, consumers, customers, clients, patients, investors, whoever your customers are, when they're going through a market correction and there's bad news coming out here, there, everywhere, it kind of scares people, right? So that's normal. That's behavior. And I think whatever your model is in your business, you've got to speak to those questions, those concerns. You have to speak right to them. Speak directly. Don't push them aside. Don't act like they don't exist. No, speak to them and how you in your business, whatever your model is, how you are addressing those. Because if I'm going to still continue to do business with you, I want to know that you see the same concerns I do, and I want to know what you're doing to mitigate the risk. And if I believe you and you set up a good precedent for what you're doing to change, I'm probably with you. I'm probably going to stay be a customer, client, patient, investor, whatever it is with you, because I believe that you're looking ahead and you're wise. So that's number one. For any business, I think in the capital markets today, just looking at the fact that we're having the rollover of the market, and I believe that we are just on the front edge of this recession correction, and the lag effect that the Federal Reserve and the increase in the interest rates has a much faster effect, almost immediate effect on the financial markets, right? I mean, we can just see news come out this last week where the jobs report was still with their data was still showing relatively strong. And so it's like, okay, well, that makes the markets feel like, oh, good. Well, things are staying strong. Consumers are going to still buy and spend. I mean, if that data is correct. So you see the markets, do a bump up, and then some other piece of bad news, something, deflates them and they goes down. Well, that doesn't happen in real estate. That's the good news. With real estate, it's a longer trend. The longer trend up and a longer trend in a correction. It doesn't just drop and then pop back up. And so we can see that and follow that and realize that there's a lag effect. Again, I'm not being negative about a correction. I think a correction has to happen at some point. It's like a forest that has been blossoming and growing, and you have the tall trees that have been there longer, and then you have a lot of underbrush that starts coming in place, right? And more underbrush. And underbrush tries to suck away the nutrients and the water and everything from the taller trees. And eventually, you have to have a forest fire. It just it's going to have it and takes out that underbrush. It's a clearing of the exuberance in the marketplace, and that's what a recession does. And we've been very exuberant in the last decade since the last great financial recession. We've been very exuberant, massively exuberant, and I think we're way overdue. So that's why I believe that potentially this correction could become relatively heavy, and the Fed doesn't have the ability to turn on a dime and just shift the quantitative easing back and reduce interest rates, and that's going to fix it. That doesn't work that way. So I think we just got to be prepared for that dynamic. But if you're positioned properly, and that, you get lean, mean, you get your model under control, you get your debt under control, your labor structure under control, and you look, watch, wait, and wait to jump back in at a greater level than maybe people are doing right now, because right now it's a little bit dicey, right? And you have to be cautious and patient right now. It's a time where patience is a virtue versus being hungry and just doing deal after deal like we've been in the last number of years.
Yeah, you're right. And get lean. It's like you're saying, just get lean, because you're right. Like the government can keep, over the last years, they keep putting Band-Aids on. Something bad goes, okay, let's give people money. Something bad goes, let's drop the interest rates. You can't do that forever.
That's right.
So now we're starting to see a little bit, and we'll see what happens, right?
We'll see what happens. Yep. Good positioning and just being aware of the different variables, I think, is what can keep people on the forefront, not getting too far out over their skis, to use a metaphor that some people are. I used to ski a lot when I was a kid, and if you got too far out over your skis, then then you could do a rollover, and not usually the friendliest way to manage the slopes. So,
right. And also, whenever recessions happen and things like that too, there's opportunity.
Of course. Yes.
So you have to be prepared for that also. Always have a reserve on the side, things like that. So when opportunity pops up, because it's scary usually when that opportunity pops up, that's usually when you're scared and you don't want to do things. But if you're positioned to take advantage, that's a good thing. Yeah, the tendency in the market is that the time to buy is when nobody wants to buy. And that is scary. It's like, if there's been like a big storm, that's come through an area, and you don't know if there's more coming behind it, and all of a sudden there's a little bit of a calm period just shortly, but you hear there's more coming, and you're like, do I dare open the door and look out? It's like, am I the first one to step out and see if it's calm enough? And like no one wants to, so like you go first, right? But if you know what you're looking for and you're ready, then yes, those opportunities will be there. So it's contrary to how we want to be safety in numbers, right? So if I'm doing like everybody else is doing, then it can't go wrong here. It's like, yeah, but that's usually not the way to go. You've got to be able to be go contra to what everybody else is thinking. And I think if you're willing to do that, look at it that way, then that's going to serve you very, very well in the near future. Right. Yeah. You even look back when COVID was, you buy stock. If anyone buys stock in the travel, cruises, Vegas, like they tanked hard.
Yes.
And everyone's worried about the world ending.
That's right.
Let alone travel, but people that invested in those types of things, they're still here.
That's right.
Still cruising. A year later, a couple years later.
Yeah.
Hey, the book behind you, Inflation. Tell me a little bit about that.
Yeah. We published that back in April of this year and kind of got on the front of it back in 2021 because we started to see interest rates start to rise. And I had a feeling that with all the stimulus that the Fed pumped into the economy, direct to consumers, to businesses, $5 trillion in like a year, I knew we had to have inflation. Now, I say I knew it. I mean, I could have been wrong, but I'm of age where I grew up. I was a young adult back in the 70s and 80s when we had the last big run-up of inflation. So not that I was investing and I understood all that, but I was enough aware to understand what was going on. And I remember particularly, Brian, I didn't have like debt back then, but I put money in like money market accounts, and I was getting like 17% as this young kid just starting out in my career. And I thought, well, this is wonderful. 17%, you don't have to do any work for that. Like really virtually risk-free, right? Well, that didn't last forever. And of course, it was a sign of the times. Inflation was running hot and heavy. So if you weren't getting double digits in your returns and you were losing ground fast, I didn't understand all that at the time. But now, see, I forgot your question. Oh, the book. Yes. Go back to the book. So that's where the idea for the book came from, is just my experience back then. I thought, well, people that aren't, at least 50 some years old, don't probably even realize what inflation is. I mean, they know the word, but it just hasn't been part of our vocabulary for decades. And now it's coming forth. I thought, I need to write a book that will serve people that if they want to learn more about inflation or how to deal with inflation. So we did a lot of research on it. It wasn't just my own experience. We did a lot of research, went back and made the case for how inflation occurs, what we've done in the past in fighting inflation, and what things are different this time that were not what they were back in the late 70s and 80s when we had it. So that's what the book's about. And yeah, I love to create content and create thought processes. So that was a fun book to write and get out this year when inflation has been a hot topic.
Yeah, if anyone wants to buy the book, where
they can get it off of Amazon. Yep. I've got those on Amazon. I actually for all the books I write and publish, I also do the Audible. So so you can actually, if you want to listen to it on the go, you can do that as well.
You narrate yourself?
I do.
That's awesome. I always like when the author narrates.
Yeah, I think it creates just a better connection, right? I mean, I agree. I'd rather hear the author, even if their voice is not as deep and resonating as somebody else could have that great voice. But I think it's just there's a better connection. You just feel like you're more in tune with the subject matter because the author's reading the subject matter, and he's going to have to put some kind of add-ons or enunciations into the book that you wouldn't get from someone just reading it.
Yeah, I found too a lot of times with the audiobooks too, you get add-ons.
Yes,
additional, just because there's little tangents. It's like, oh yeah, you know what? By the way, let me elaborate.
That's right. That's right. Yeah, it's like you get insights that you wouldn't get just in the actual manuscript.
Yeah, that's good stuff. Hey, well, David, if anybody wants to reach out, what's the best way to connect?
Through our website, freedomfounders.com. If people are interested in what we do in the mastermind, again, we're pretty kind of narrow in who we're right for. But if someone's in the area of professional practice or something like that, and they're interested, that would be one way. I do a regular podcast called the Dentist Freedom Blueprint Podcast. You don't have to be a dentist to appreciate it, but again, because I have an affinity toward dentists, I just put that on there. So it's Dentist Freedom Blueprint Podcast. I've got the books. I do regular YouTube blog videos. So you can make all those connections, through the website if people want to just kind of keep up and, follow any of my train of thinking, whether they think it's good or not.
I like it. Hey, and David, for your mastermind, exactly what is the target audience? Like, who's a really good fit in that?
Yeah. So it doesn't have to be professional practice owners. We have people that are other business owners outside of health, but because I speak to dentists, we're mostly there. But like I said, you don't have to be a dentist to understand what we do, because I don't talk about clinical dentistry. I will not talk about flossing or brushing teeth. All right. We just leave that completely out. Whether you brush or floss is up to you. Speak to your dentist about that. But it would be people that have businesses, I would say, where they have in their overall picture of net worth, retirement accounts, equity and other assets, whole life insurance, cash in the bank, stock brokerage accounts, annuities, typically $750,000 to $1 million in total equities that potentially, I say potentially, could be redeployed as they see fit into what we do to get the income aspect of their investments going. And they don't have to be exiting business. They don't have to be out of business. We've got docs that are exiting, have exited sooner than they thought. We've got younger docs in their early 40s that are just getting a pathway going forward. So I'd say just, having enough capital, we can help at the right time and the right investments to help deploy that, gets them the financial ROI. The rest of the ROI is just being a think tank where people are navigating lots of aspects of life, business, investments together. So we look for those things, and we're very selective, but having a conversation is the only way to determine if there's a good fit.
Sure thing. Yeah, that makes sense. Okay, cool. Hey, well, thanks for coming on, David. We appreciate you.
Brian, it's my pleasure. Thanks for reaching out, and thanks for the conversation today. I enjoyed it.
Yeah, sure thing. And hey, everyone, for listening, thanks for listening. I get out there, crush it, close some deals. Hey, we'll see you, David.
All right. Thanks, Brian.